Hey, what's up guys? John here, the CEO of America's largest real estate company, Starwood Capital. They own $115 billion worth of real estate, predominantly single-family homes. However, they're also heavily invested in hotels and office buildings. He said a best-case scenario going forward will be 2 bank failures a week, but a more realistic and likely scenario is a bank failure every single day going forward.
Republic First Bank was collapsed and was seized by state regulators. This is the first regional banking failure this year.
Jerome Powell made a very similar statement, saying that he believes that we're going to see regional banks going down, but not the big banks. Said that March 8th. Janet Yellen saying the same thing. Other billionaire CEOs saying the same exact thing, that defaults are coming. Very, very ugly market over the next 2 years. And talking about what's happening to regional banks. But what if I were to tell you that this is a scheduled demolition of the regional banking system in America? We're going to witness many hundreds of banks going down over the next 12 months. I would almost bet money on this. The reason for it, it's not just commercial real estate. There's a variety of other facets happening in the background, all pushing everything to a head like this, and it's going to explode. We're going to walk into some really, really big problems. I'm going to break this down for you. I'm going to show you exactly what's going on in the U.S. banking system and the economy, why I believe we're going to walk into the greatest rug pull and the greatest contraction of credit we've ever seen. Please hit the like button, hit the like button. YouTube will share this content to educate the people about what's going on in the U.S. economy and real estate market. And if you'd like to fix your credit, we would love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call for tomorrow, for Friday. As credit contracts, the people that get access to credit will be those that are viewed as less risky, those with great credit and strong financials. So make sure your credit score is in line with your goals. Let's take a look at this. So billionaire real estate investor Barry Starlett said he expects at least 1 bank failure per week due to real estate loans. That is a fragile animal right now. Barry Starlett, CEO, or the co-founder and chairman and CEO of a $115 billion real estate giant, Starwood Group, is worried about more than 4,000 regional and community banks in America, with the real estate industry struggling against higher interest rates, vacancies, and inflation. Their lenders of choice may be in for some pain, according to the billionaire. Now, look, they're not only going after these regionals by keeping interest rates higher, but the regionals, they're holding 80% of all the commercial real estate debt. A lot of these regionals had a lot of their capital pulled the last year and a half with Silicon Valley, with a lot of the instability unfolding at that time. But also now a lot of people are suffering under higher inflation. They're pulling their money out. They're putting that money into CDs. So why would you leave money in a bank at 0.01% interest when you can put it in a CD, you can put it in a T-bill for 4.5% or 5%, right? So a lot of people are doing that. They're taking their money out of the banks to put their money to work. It makes sense, but it's just more and more pressure and weight for these regionals. But he goes on to say, I think people are looking for the cracks, and you're going to see the cracks develop now. You're going to see regional bank fail every day, or not every week, maybe 2 a week, right? This isn't just some, journalist or economist going out there, giving an opinion. And no one knows the banking system. No one knows, debt better than, the CEO of the largest real estate company in America, right? Despite Starlett's prediction, just 1 U.S. bank has failed so far this year, Republic First Bank, a regional lender that operated in Philly, New York, and Jersey. The bank collapsed and had roughly $6 billion in assets, $4 billion in deposits seized by the FDIC after facing issues with rising interest rates among its sizable commercial real estate holdings. Starlett has warned that pending problems due to rising interest rates in the real estate and banking sector, as well as the whole economy, for more than 2 years now. September 2022, just a few months after the Fed began raising interest rates to fight inflation, he said officials were using old inflation data, particularly related to housing, to attack economy unnecessarily. 1 month later, Starlett followed up on that criticism, arguing that the entire economy was breaking hard due to soaring borrowing costs, and a recession was all but inevitable. But with the U.S. proving its resilience to higher interest rates and inflation by the summer of 2023, Starlett admitted the recession calls were premature. Well, I wouldn't say that, because if it wasn't for the Bank Term Funding Program, which came out in, right after Silicon Valley in March of 2023, his predictions were before that. They came out and they issued $161 billion as a lifeline to 1,804 banks. If they did not do that, then he would have been right on the money. He would have been correct, 100% correct. So his prediction wasn't premature. He was just underestimating the ability for the manipulation that unfolded in the market to unfold. And he did not understand the strength of the consumer. Well, I talk to a lot of consumers every single day. I own GreatCreditFast.com, and our team talks to people nonstop all day, every day. And I'm telling you, consumers, every single month, they're in a little bit worse of a situation than they were, the month prior. Everything's getting much, much more expensive. I mean, across the board, whether it be, food, utilities, car insurance, everything is more expensive. So there isn't really a really strong consumer, at least that we're seeing. We're seeing a consumer that is really getting pushed, to the edge, right? And so this data I really, really question, along with inflation data, along with unemployment numbers. I mean, you look at the unemployment rate right now, they're adding in people that are working 2 jobs, 3 jobs, as all individual high-paying jobs, not side hustles, right? A lot of this information, we really have to look at closely, because the billionaires, they're placing their bets based on what's really going on, not based on what they're told is really going on. I mean, look at this, for example. Nearly half of office loans now risk default. More than 1 in 10 commercial real estate loans overall in the precipice. Heading into 2024, according to the National Bureau of Economic Research. A new paper from 4 economists, National Bureau of Economic Research, argue that 14% of the $2.7 trillion in commercial real estate loan market and 44% of office loans currently carrying outstanding loan balances higher than the property value are at risk of immediate default. And so when you start to kind of connect the dots here, you're seeing foreclosures on commercial real estate spiking 117%. You're seeing real estate developer soaked multi-million-dollar loss in San Francisco. Like, all of this is today, yesterday, last 72 hours. And some of these losses are $50 million, $100 million losses. I mean, look at this, for example. This deal right here, just in, and this came out 5 hours ago, just in, owner of San Francisco office building may take a shocking $100 million haircut in just 5 years. Now, who is the owner? Is the owner, the investor? No, the owner is the bank, because that owner, I can almost promise you, put 20%, 30%, 40% down at that time. Probably put 30 to 40% down at that time. So if they bought it for, let's just call it, $156 million, and let's say that they put down $40 million, and so the bank pulled up, put up 110, right? If they sell this, for 50, the bank loses 60 mil on that one deal, right? $60 million plus cost of sale, agent fees and transfer taxes and so forth. So $60 million on this one deal. Now, if you start to look at the amount of these deals happening, this is, yesterday, another one. This lender was the highest bidder with 12.3 million credit bid at an auction, right? The building was previously acquired for $137.5 million in 2021. That's more than a $125 million haircut in 3 years. Like, how many banks can really absorb these types of losses, right? These are different cities, different deals, and this is happening all throughout America. Jerome Powell himself said he will not cut interest rates until unemployment really starts to go up and inflation starts to go down, and we get closer to that 2%, 3% number. That's not going to happen. It's just not going to happen. I can promise you that. They're even coming out now saying that that they're saying right here, the Fed president says rate cuts may not come in 2024. Now, I've said this before 2024 even started. I said this in December, that I can almost promise you there will not be any rate cuts in 2024. Everyone's going to be misled for March. Everyone's going to think it's going to happen then they're going to think it's going to happen in May. And what's going to happen is nothing. Rates are going to stay higher for longer, and we're going to likely see a 25 basis point increase eventually. I don't think we're going to see rates being cut. And so every basis point, 25 basis points going up might not sound like a lot, but it does a lot to the consumer, and it does a lot more even to the banks holding a lot of these commercial real estate loans, because as interest rates go up and the cost of capital goes up, the values of these assets fall. And when you have all these regionals holding all of this debt, they're being pushed off of the cliff financially. Now, what I think is going to happen is I believe a lot of these buildings are going to trade hands for pennies on the dollar. A lot of these buildings are located in cities, and a lot of these buildings, they'll either be demolished and rebuilt for dense housing, or they're going to be converted into office residential conversions with communal bathrooms and things like that. Now, people might think, John, that will never get approved. The White House right now is bringing forward $35 billion worth of debt to incentivize and entice developers to follow these protocols and these procedures. There's a lot of studies being taken right now in New York City where they're talking about the benefits of what a communal, bathrooms and communal living would do for, solving homelessness and driving down the cost of living. So we are going to start to see this massive push into cities. And with what's unfolding right now in commercial real estate, it just seems so obvious. As regional banks go down, according to the CEO of the largest real estate investing company in America, as these regional banks start going down, who's gonna buy these deals, right? The highest bidder is gonna buy these deals. I'm betting it's gonna be the large institutions like BlackRock, Blackstone, some sovereign wealth funds, insurance companies, all of which will be aligned on, the highest and best use for these properties. So, it's pretty shocking. Looking at, look, this is yesterday. Just in, Canadian investor takes a shocking $176 million loss. $176 million loss. They sold it for $43.5 million, right? The Canadian Pension Fund Investment Board acquired 45% stake for $219 million, right? And so this is happening like every single day. Another one, right? The previous owner paid $115 million or $444,000 a unit. Just sold for $83 million, $320,000, right? So another $40-50 million loss. Like across the board, we're seeing this in all these different cities. Just in distressed office building in Chicago hits the market, could trade a shocking 80% haircut. Now you have to ask yourself, if this is all unfolding, separately, I would say, what, we're probably going to see, some regional banks consolidate. We're going to see, certain banks, getting hit a lot harder than others. But then when you add in this the Fed, this BTFP program, where 1,804 banks borrowed $161 billion. Look at this. $161 billion they borrowed, $165 billion in loans, right? It extended its peak. The BTFP program, what this did was they told these regional banks, hey, look, you guys are struggling with deposit outflows, people are pulling their money out. Yeah, you need to draw up some liquidity. You're probably sitting on a lot of losses on, XYZ investment. We'll buy that investment from you. At no loss, we'll give you the full price in which you paid, and you pay us back in a year. It'll be a bridge loan. It'll be just for 1 year. And so they took the money. Like, yeah, we'll take it, not knowing that the value of those assets would actually fall further and further and further. So no longer is what it was when they sold it. Now it's worth a lot less. And so now these regionals not only are getting crushed on their commercial real estate loans, but they now have to pay back the BTFP. So they have to pay back these, 1,804 banks have to pay this money back. And so you start to look at this. How many of these 1,804 realistically will be able to pay back that money? I would argue a small fraction. And so what I'm betting on is exactly what the CEO of Starwood Capital is betting on, which is major consolidation, a major shift in lending, and a completely different landscape for office and commercial property all throughout America. What do you think about this entire situation? Do you think Barry is right on the money? He's telling the Fed to lower rates. I don't think the Fed's going to lower rates, but he's hoping that they do. You think they're going to lower rates? Or do you think we're just going to see a massive consolidation of regional banks, and we're going to see JP Morgan Chase, Wells Fargo, Bank of America become behemoths inside of the banking sector, like essentially acquiring tons and tons and tons of banks? What do you think? Let's have a conversation below. If you'd like to fix your credit to position yourself, what I believe is going to be the biggest wealth transfer ever. I've said this before because that's obviously what we're walking into. We'd love to help fix your credit. If you have any credit issues, if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any issue at all in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow, for Friday. I'll catch you next video.